Hey everyone, before you watch the video that's coming up, I have a favor to ask. Please, please, please realize that the information I'm providing is not specific financial advice for you. This is information that I'm trying to get out there so you can increase your knowledge about different topics in the financial industry, but you must still speak with your own financial planner or financial professional to understand how it relates to you. Everything I say is basically information that is general. And it's still incumbent upon you to do your own due diligence. I may think I'm saying everything 100%, but there's nobody confirming this. I've been doing this for 25, 26 years, but that doesn't mean I might not say a wrong word or two here or there. So please, this is my disclaimer. It's as accurate as I know it is, but uh, also know that this is some information on YouTube. We don't have a relationship as a financial planner client. If we did, I'd know a lot more about you and I could give you more information. But for now, thank you so much. I hope you enjoy the next video. If you have questions, put them into the comments and I'll do my best to answer every single one of them. Hey, good evening, everybody. It is after 9 o'clock. The day is over for my day job. So now I'm turning to do some content for you guys. And I thought I'd start with a piece of content, really basic, just to get things going. We're going to talk about fund facts. Fund facts are a document that is very important if you own mutual funds. And I thought I'd start with fund facts because it gives you a lot of information about your fund. And what I wanted to try was how easy is it for the regular Canadian investor to find out information about their own funds. So got my Google open here, and before we look for a mutual fund, I'm just going to type in fund facts just to see what happens. And well, the first one, that's a sponsored link, fun facts with CIBC, but I'm looking for more like um, an example, a guide, a definition. And it looks like all the major companies, they just list fun facts, but they don't say what it is. So let's say, what are fund facts? So we got a nice AI generation. Fun fact, let's see how accurate it is. Fun fact documents are standardized two-page summaries providing key information about mutual funds and exchange traded funds. And these documents help investors understand the fund's characteristics, including investment strategies, performance, risks, costs, before making investment decisions. Well, that remains to be seen because I don't think I've come across a single investor that has ever heard about fund facts, but they are a great snapshot if you ever want to know what your funds that you own are about. So why don't we actually just go back and maybe let's pick the first company that is talking about fun facts. So we're not going to try to pick on anybody. We're just kind of giving information, whether it's CIBC here, the first one, whether it's dynamic funds, whether it's Mackenzie Investments, Fidelity Investments, RBC. So let's see what happens if I click on the CIBC link. Imagine you have a CIBC mutual fund, let's say. It's accept all the cookies. And most Canadians are going to be, if they're working with somebody in a balanced fund. So why don't we just go ahead and pick the CIBC balanced fund? And I'm going to do another video about what this means, Class A and Class F, on another video because it's a lot of information. Today we're going to focus on fund facts. So let's click on the A, which is typically the kind of mutual fund. Sometimes it's called Series A, sometimes it's called Series B, but these are the funds that you will mostly get when you walk into a retail bank branch, for the most part. So let's pick that one. And we're going to make this a little bit bigger. So clearly it says fun facts right here. And then another important first thing that you want to look at is definitely these are not updated regularly. They're done periodically. So this is the last one was updated as of June the 20th, 2025. So this is not to get the current return or anything like that. You would get your returns for your specific portfolio directly from your financial institution, from your statement. And even the statements are basically quarterly. So you're looking at the end of if it was a June quarterly statement, you'd be June the 30th. But these are basically giving you a lot of good information. Did you ever want to know what your fee is on your mutual fund? Well, you can see it right there. If some of you can spot it right away, probably because that's where we want to look first. At least that's my experience. A lot of clients are wanting to know what are the fees. And so we've got the fee right here. It's called the management expense ratio, and it says 2.16%. So I'll come back and explain how that works. We're going to go a little bit more throughout the rest of the fun facts. And this tells you that this CIBC Balanced Fund, Class A, has been around since 1987. So it's got a long history. And the other important thing to really understand about this is, because it's going to tie into the fees and everything, is that this is not a CIBC bank fund. It is actually a CIBC Asset Management Inc. That's the portfolio manager. That's who created this fund, not CIBC Bank. CIBC they own CIBC Asset Management, and this is the company that's responsible for creating all the mutual funds. That they're the portfolio manager. They decide how to invest in the fund and so on. So you can see it's also a very large fund. This is typically in the millions. So this is $266 million. Have I got that right? It could be. It doesn't quite say here. Sometimes it's in billions, but this one doesn't say in millions here. So I'm going to say it's 266 million, 266, 997, 796. I could be off on that, but suffice to say that it is a large fund. You must make initial $500 investment, and then you can do that $25 a month. Now, what does this fund own? This is going to tell you what it owns, and it usually gives you the top 10 investments. And in this case, they're definitely mostly stocks. So you've got Royal Bank, TD Bank, Enbridge. For some of you, it might feel weird. It's a CIBC fund. They're a bank, and they got other banks in there. Well, the thing is that it's CIBC Asset Management. These are portfolio managers, and what they're trying to do is get the best return for the people that purchase this fund. And so they'll do analysis. They have people that are going to analyze the stock and the companies here, and they decide whether it's a good buy or not to buy. So typically you'll see a lot of the banks in the Canadian balanced funds, but you've also got here Enbridge, and there's some cash in here. That's a large portion at the very in the top four. And then they've got a bond. Then they've got some mining companies: Shopify, Microsoft, Constellation Software, Canadian Natural Resources. And on this side, it basically tells you the investment mix. So it's got in equities, corporate bonds, financials is 14%. And the way I typically say this, for every $100 that you put in here, $14 is in financials, $13 is in provincial government and guaranteed bonds, and so on and so forth. How risky is it? Now, usually when it's a balanced fund, even though there's stocks involved, and by the way, I just noticed there's another thing here, that there's a total number of investments in here, 770 individual investments. But you'll see that this is the risk profile. And that's another video altogether. Like, how do you figure out what your risk profile? Am I high? Am I medium? Am I low? What is low to somebody might be, what's low to medium to somebody might be high to somebody else. And that's all explained in another future video. So, but this will tell you that if you own this fund, it's a low to medium risk. So if your financial planner or whoever you're speaking, your representative has done a good job in identifying what your risk level is, then they can be confident, and compliance can be confident that this would, if you're low to medium, that this fits your profile. Now, if your risk profile is medium and you own this fund because it was recommended, then that's going to be a red cross, and compliance would want the representative to explain, well, if you're a medium risk investor, why are you in a low to medium risk fund? And also vice versa. If you're a low investor, a conservative investor, why are you in this fund? It's too risky for you. Now, the next part is how the fund has performed. And what this will give you, don't forget, this is as of June the 20th, 2025. So let's scroll down a bit. And the first chart that you see here is the annual returns. So it'll show you that the year ended 2024, this fund did 12% return. 2023, 7%, 2022, minus 10%, minus 10.6, and so on. One thing to keep in mind when you see these returns, so for example, last year, if it did 12%, that is the return to the investor, but it's not the return the fund actually did. The fund would have returned 12% plus the 2.16, but this fee gets taken off, and this fee goes to pay CIBC Asset Management Inc. They take their portion for all the work that they have to analyze, the different stocks, the RBCs of the world, the Enbridges, the Canadian Natural Resources. They do work. It's like they're picking the stocks on your behalf. The only way you're not going to pay them is if you open up your own brokerage account and you buy these stocks individually yourself. Then you would pay the one-time commission when you buy it, and you don't pay any other fee until you sell it. Then you pay a commission to sell it. Unless, of course, you manage to get one of these, online things, and the commissions are very low. But I have another video to talk about that in the future for sure, 100%. All right, so it does tell us that the best and worst 3-month returns. So this table here is showing you that the best return over 3 months was actually the 3 months ending June the 30th, 2020, which was 12.7%. And the worst was the same year, minus 12%. This is nice information, but I think most people are going to focus on this chart. And most eyes are going to go to like here and here, and people don't kind of see this part. Like this is a real negative 10%, and when it's historical, it's like whatever happened in the past. But when you're in the thick of things and the markets tumble and you hear the radio, this is the part where you will lose money. Normally, I've seen, for example, investors who are not working with a financial planner and they don't have anybody to talk to. They just hear the news. They might panic and they might sell, and they might sell at the worst time. And when they sell at the worst time, we know that the markets recover. We don't know how long they take to recover, but they have done so historically. So the key is usually the mantra is stay invested unless you need the money. Like you will know, goes back again to the part, and I'm getting a little bit off tangent here. A good advisor will challenge you about your risk profile. They want to make sure that you're protected. So if you walk into a financial planner's office and you say, "Hey, here's 100 grand. I'm going to need the money in the next 6 months for a down payment," then most likely they shouldn't be. I shouldn't say. I'm not going to, without knowing the whole situation, but normally you're going to be in cash or a cashable GIC or a high interest savings account, because this is even still too risky. The time frame is not enough, and you should be disqualified from the risk profile for even being allowed to purchase from compliance. Like there's questionnaires that we would ask. Another video, of course, I'll get into that. And when those questionnaires are asked, if you say you need the money in less than a year, then basically no mutual funds are on the table that the advisor can advise. And if they do advise it, well, then compliance is going to have an issue with that, because your 100 grand in 6 months could become 80,000 or 90,000. Like if there's a negative return and you need that money for the down payment for the home, sayonara. You're basically, you need that money out in 6 months, and you're taking it out whatever it is. All right. Now, this fun facts does say it's for investors who are seeking both income and the potential for long term growth and are investing for the medium to long term. So, medium to long term, 6 to 10 years would be, this is what the fund is for. Um, and it does talk a little bit more about how much it costs. So it's explaining to you the fund expenses and the sales charges. So, for example, fund expenses, you don't pay these expenses directly. No one's sending you a bill to say, "Hey, you got to pay me my 2.16%." It's taken off automatically by the asset management company to pay their costs. And well, what happens to the guy or the girl or the person or the financial planner that's sitting in an office recommend? How do they get paid? Well, either they're getting paid a salary, so it doesn't really matter, or they're paid on commission, and their commission is actually part of this Why is it? I'm going to tell you why it's 2.2%, but it's part of this 2.16%, because what happens is this will go to the asset management company, and then a portion will be cut off, like about 1%, and it's sent to your advisor. And if that advisor is sitting in a CIBC branch, then that 1% actually doesn't go fully to the advisor, it goes to CIBC, and they take their portion, and then it trickles down, and the advisor gets whatever their pay level is or their commission grid is. Okay, and the other thing to know about this is that well, actually, maybe I'll keep that for another video, because usually the Series A or B funds can only be sold at the company that issues them. So CIBC, like you wouldn't typically be able to buy this at RBC or a TD or anywhere like a brokerage. Now you could buy the Series F, which is again that other video I'll talk about, at any other financial institution if their product shelf is open to allow that, and I'll explain that a little bit later. Now, what else is here to? So the cost. So the 2.16, by the way, is the base cost, and then there's going to be a trading expense. So these are the fund's trading costs. If they trade a lot, if they buy and sell a lot, this will be higher. If they don't, it's not. So there's the 2.2. All right, and this is kind of this has been, we always talk about this in the past. You could be charged up to 2% of the value of the units that you sell. If you buy the fund and sell within 30 days of buying it, they reserve the right to charge a 2% fee. So again, it really goes back to the advisor doing the proper job. Like, nobody should be, emergencies happen. You come in, you say, here's my $100,000 or my 20,000 or my $500, whatever. You want to just start out. And you say, I'm not going to need this for 6 to 10 years, but then something happens, an emergency, and you need some of the money. I mean, you're going to need the money. So if you go in and say, I need to sell it, then they could charge up to 2% of the value of the units that you sell. There's also switch fees and conversion fees, and tells you what you can do if you change your mind, and then information. Now, you're probably never going to call these people. You're going to go back to your advisor, but this is a fun fact. This is how you read a fun fact, and they're all very close in how they are shown. So maybe what we can do is find another fun fact to show you. So let's go and type in fund facts again and see who else comes up. We're not going to be picky, but we're not going to do the Sun Life because that is a insurance company. We want to keep to regular. So here's a fun fact from Mackenzie Investments, a link for them. And while we wait for, let's refresh this. Okay, it's not coming up. So let's open up another tab and maybe we'll find something. Dynamic funds. So it's taken us to dynamic fund ETFs. And that's not the topic of this video. That can be a topic of a future video. So let's go and find NEI investments. That's true NEI investments. Okay. So you're going to start to learn more and more. These are all different series, and we looked at the Series A before. So we're going to continue with the Series A. And let's find a balanced fund so we can be on the same kind of idea. NEI balanced yield, or NEI growth and income. It's all under the balanced category. So let's go with the growth and income. No. All right. So here we go. Kind of looks the same, right? So there's the fun facts. This is as of March 27th, 2025. So one key here is you can't really compare fun facts with other companies' fun facts. The only way to do that really is to, uh, if you have an advisor that has access to software that can put it together and put it side by side, then you can compare it that way. But really, the fun facts, and by the way, when you buy a mutual fund, you're supposed to get the fun facts either emailed to you, mailed to you, hand delivered to you, so that you have it. Most people don't even know or pay attention. So, what are the things that we can see right away? Well, we can see that, the fee is 2.72, right? Now, don't judge that. Like sometimes the fees, I mean, it is a high fee, but that doesn't mean it's bad. It doesn't mean it's good. It's just a fee. So, what I would say, if you're an investor, you would need to make an informed decision based on the information. So, sometimes a higher fee does result in a better return, but it's not a guaranteed thing. Like, really, we're just throwing darts at a dartboard to figure out, what we can't manage the market or control the market. So it's really the analysis and the special the specific goal of each fund, because they each have a mandate of how to invest, right? Now, NEI looks like it's a Northwest and ethical investments. Excuse me. So they may have, higher fees. I'm not going to, guess, but that could be one of the reasons. And we have 206 million in here, similar to 266 million on this one. So there's a 2.72. This one's a little bit different because it has pie chart, but again, it does have the top 10 investments. And here, instead of different stocks, you'll see that there's other funds as well. And now here's the Series I. More confusion. So the Series I is going to be probably a fund that has very, very low fee. What's actually, let's take a look. Series I, I'm going to just go back for a second. And there's our Series I. Just to give you an idea, we'll click on this Series I. And yeah, it's not available. Um, so this is probably a series that is available to like higher net worth investors, or that investors that are working with a financial planner. I'm going to stop talking about that right there because I don't want to go down the rabbit hole of this. That's definitely another video. Click back on here, and you can see in total it says total of number of investments is 63. However, it's more than 63. This one said 770. Most likely, we don't see all of them, but there might be other mutual funds here. But it looks like the top 10 investments are stocks. In this case, it says 63, but there's a lot of other mutual funds here, and then there's a bunch of stocks. Now, in these mutual funds, there could be hundreds of other investments, right? For every $100 that you invest in this fund, $17.40 goes to financials. $9.80 goes to corporate bonds, and so on down the line. The risk rating, low to medium. The rates of return, again, 9.7, 6.8, 19 minus 18.7. Please, 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 I beg you, do not compare. I'm not trying to compare on this video NEI with CIBC or any other company. This is just purely how to read it, because you have to be very careful that when you're comparing funds, you're comparing apples with apples. And the way that you do that, each fund has a sort of category that your advisor will know. And there's ways to find it as well online. But if it's going to be like a global neutral balanced, if it's that category, then you can compare it with another global neutral balanced. It's got to be the same category. Otherwise, you're not comparing apples with apples at all. Okay. So this is showing again the best return, the worst return, how much does it cost, basic information. So it's still showing a sales charges have kind of disappeared. So if you go to most financial firms right now, there's no front end sales charge, there's no back end sales charge. That was used to be called deferred sales charge. That's gone. But it looks like they're still listing five front end. You're probably not going to be charged that, but maybe if you're working with an advisor that's a solo advisor and that's how they get paid, then it might be the case. I'm not sure about that. That's something that you'd have to ask. but at least it's there. Now here you show, this shows a little bit better. Like it actually shows you, I love showing the dollar because percentages, sometimes you don't, doesn't fathom the percentage, right? But this one here, it says for every $1,000 you invest, this equals to $27.80 of a fee. And this is, by the way, this is an annual fee. It's not a daily fee. It's an annual fee, and they'll calculate it based on the value of your holdings day by day by day by day. Okay, so um, that's how that works. What else have we got here? Again, now this is a bit different. For transactions in excess of 10,000, we may charge you 2% if a redemption occurs within 1 to 7 days. So usually this is not an issue because people are not investing and taking it out right away, but it is there that you have to be aware of. Okay. So we can do another one. Let's see if, oh, here we go. Mackenzie came up. So let's go to investments by mutual funds. See how easy it might be to find it, because sometimes it's not that easy. So let's go Canadian Balanced Fund. Canadian Balanced. What do you want to pick here? Let's go with Mackenzie Cundill Canadian Balanced. I think that's been an old one, like it's been around for a long time. Right away, I see Series F. My eyes are trained to see these things. Your eyes may not be. So if you, now you know you're going to go to Series A or Series B. And I don't know why there's all these different series. But actually, you could, now I see that there's actually already here, download Series A, download Series B. Let's go ahead and click that. Now, this one doesn't say fund facts. So this is not actually a fund facts. This is a more detailed, in-depth analysis. So you can get these two. Let's not waste our time with this. I want to find the fund facts. So how easy is it to find the fund facts? Let's keep on going down. There's a lot of information here. We got all the different parts, the portfolio managers. Got more performance data, lots of stuff. We got it's almost like a fun fact, but it's on the screen. Okay. So far, no fun facts. Okay, here we go. We're getting closer. Fun facts. So there you go. You got to keep on digging. Fun facts is right here. And it's opening up slowly. All right. Oof. All right. So this took me the fun facts for every fund again. So we're going to have to find the balanced one, balanced funds. Hopefully now as you're watching more, you can get to know more and more about how they're categorized. Here's our Mackenzie Cundill Canadian Balanced, and they have a lot of series. So let's go to the A series. And is this how big it's going to go? That's it. Can't make it bigger. All right, we'll deal with this one. So it does say fun facts. So this is definitely the fun facts. Here we've got the MER 2.29. It's as of June the 12th. So we've had 3 dates right now. June the 20th, June the 12th, and what was the other one? It was March the 27th. So we're all over the place here. This one lists, it shows that it started, Series A started October 7th, 1998. So that's the history of this fund. And then they do have the pie charts here as well. I have another pie chart. So you can see that there's some wiggle room of what they're presenting. In this case, they've got the top 10 investments are stocks from Brookfield Corp to Royal Bank, Enbridge, a lot of the similar ones. And then it says that for every $100, you've got $62.70 in equities. Equities means stocks, okay? 32.3% in bonds, and then you've got a couple of, so you have some mutual funds, exchange traded equities, and so on. And again, for every $100, $18.8 in financials, and then followed by corporate bonds, and so on down the road. And that's it. They don't have, oh, do they have another page? If we click, yeah, there we go. Low to medium risk. And again, the calendar returns. So we got 15.8 in 2024 minus 6.7. So far, I haven't seen anywhere on fun facts, and it's probably going to be on the other document that I showed you with more information, what the category is. So if you want to know if you can compare categories, I'll make another video on that. But for now, let me close this off and go back to uh, at the very top where it said to download, or actually got to go back. And remember when I downloaded that first one, the download series A, and it was that bigger thing. Okay, let's take a look here to see if I find what the category is. I don't see it. We're looking for a category. You know what? Let's try a control F. Category. No, it's not on here. Let's try one more company. I'm pretty sure I can find it there. Let's do RBC. And I know this one, I've done it, I've used it before. I'm not recommending it, it's not a recommendation. I'm back. Guys, I've been talking for 30 minutes. Why don't you tell me? Oh my goodness. So my video stopped recording because it only records up to 30 minutes at a time and it just stopped. So I don't know where I left off. Let's finish this off because I don't want you to stay here forever, and we'll do more topics. So we're back here. I'm on the RBC website, and they've got the different series again. So we do Series A. This says Series A for the US dollar, but we're going to pick this Series A. And here, very clearly, there's fun facts. So let's take a quick look at that. And here we go. We have their fee. We have their since inception, 1986, 61. How do I? This is 61 million. So that's 61 billion. Woo! I think so. We no, 61. It's a lot of money, whatever it is. So basically, again here, um, we have the breakdown in a pie chart. How it's broken down between fixed income, U.S. equities, international equities, and Canadian equities. The 10 top investments. I'm going to go really quick. Low to medium risk, and the 10 calendar years. By now, you should know all this. I can test you, and you should be able to answer. Go find your fun facts and tell me what your fee is. Now, let's go back and pick up the monthly update. And yes, 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 yes. I can tell you now, when you want to compare funds, you need to find the fund category. And this one tells you clearly it's a global, neutral, balanced fund. Okay. I'm going to end it up there today. We talked a lot. I've gone over 30 minutes. I'm surprised you're still here. Here's your homework. Um, if you have a fund, if you have investments, go online, find your fund facts. And I'll give you one little tip. If you can't find your fund facts, but you can find your fund code like RBF 460 or CIB 477, or where is it? Where are you? They got the phone code here somewhere. Here we go. I just saw it. MFC 740. That's all you need. So let me show you. We're going to go for, we're going to look for, go to, if you know your fund code, and you can get that from sometimes your statements, you go RBF 460. Let's open up another Google, and you say RBF 460. It should work. I hope it works. Fun facts. Hit enter. And it takes you to the same thing right away. Looks like other places, like they've got the Morningstar or whatever, but it should pop up right there. Let's try. Sorry, I can talk on forever, but let's try I don't know the specific fund codes, but for the TD funds, it's going to be TDB. And let's try 460. Who knows? Maybe there's a fund with that code or not. Oh, it looks like 446 comes up. Check it out. There we go. Fun facts. It works. All right. Hope you learned something. Uh, if you have questions, put them in the comments. I'll do my best to reply to each and every one of them. And if there's a topic you want to hear more about in the future, please also let me know. And I'll do my best to get it out to you as quickly as possible. Thanks a lot and have a good day.